Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 30th, 2025, and we're diving into the latest earnings report from Credit Acceptance. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Credit Acceptance has just released their fourth quarter and full year 2024 results, and there's a lot to unpack, from their net income performance to changes in their loan portfolio dynamics.
Revenue and profitability overview. Let's start with the top line. Credit Acceptance reported a total revenue of $565.9 million for the fourth quarter of 2024. This is a significant increase from the previous year. John, can you elaborate on this growth?
Absolutely. The revenue growth was primarily driven by a 14.7% increase in finance charges, which is a result of a larger average balance in their loan portfolio. Additionally, their net income saw a substantial rise to $151.9 million, marking a 62.3% year-over-year increase. This was supported by a decrease in provision for credit losses and an increase in premiums earned.
And how did this impact their earnings per share?
The adjusted earnings per share came in at $10.17, which is a slight increase from $10.06 in the same quarter last year. This reflects their ability to manage costs effectively while growing their revenue base.
EPS forecast and analyst expectations. John, analysts were forecasting an EPS of 18.7 for Credit Acceptance based on a survey of 2 analysts. How did the actual results compare?
Credit Acceptance exceeded expectations with an adjusted EPS of $10.17, beating the forecast by $2. This outperformance can be attributed to their effective cost management and higher-than-expected finance charges, which bolstered their bottom line.
That's quite an impressive beat. What does this say about the company's financial health?
It indicates strong financial health and operational efficiency. The ability to surpass EPS forecasts suggests that Credit Acceptance is effectively navigating market challenges and optimizing their financial strategies.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Credit Acceptance has reported a 14.0% growth in their loan portfolio on a GAAP basis. What are the key drivers behind this growth?
The growth in their loan portfolio is largely due to an increase in the average balance of loans, which is the largest ever for the company. Additionally, they have managed to increase the initial spread on consumer loan assignments to 22.4%, up from 21.7% last year, which enhances profitability.
However, there was an increase in the cost of debt. How does this impact their financial outlook?
The average cost of debt rose to 7.2%, primarily due to higher interest rates on new financings. While this increases interest expenses, the company's strategic stock repurchases, reducing outstanding shares by 4.7%, help offset some of the impact by enhancing shareholder value.
Risk factors and strategic initiatives. John, let's discuss some of the risks and strategic initiatives Credit Acceptance is focusing on. What are the main concerns highlighted in their report?
One of the key risks is the decline in forecasted collection rates, which impacted net cash flows by $31.1 million. Additionally, consumer loan prepayments remain below historical averages, affecting cash flow timing. Despite these challenges, the company reported an economic profit of $51.3 million, indicating strong underlying performance.
And what strategic initiatives are they pursuing to mitigate these risks?
Credit Acceptance is investing in enhancing their product offerings for dealers and consumers, aiming to improve the speed and efficiency of their services. This strategic focus is expected to drive long-term growth and profitability despite the current economic challenges.
Key takeaways. In summary, Credit Acceptance has delivered a strong performance in the fourth quarter of 2024 with significant revenue growth and an impressive EPS beat. Their strategic initiatives and operational efficiencies position them well for future growth. John, any final thoughts on their investment prospects?
Credit Acceptance's ability to exceed EPS expectations and manage their loan portfolio effectively makes them an attractive investment, especially for those looking for exposure to the financial sector. However, investors should remain mindful of the risks associated with collection rates and interest expenses.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Credit Acceptance's performance in the comments below.